To all my listeners, whether you're a gold bug or you're concerned about inflation and protecting your capital, you need to check out my brand new conversation with Dan Ferris on the Stansberry Investor Hour podcast out now. You can easily access the episode by clicking the link in this video description box. Hope to see you there. Inflation now hotter than ever, surging to 7.5% on an annual basis, even more than expected, and the highest since 1982. Joining me here today on Stansberry Research is Kevin O'Leary, star of Shark Tank, investor and venture capitalist. Kevin, always good to be with you. Nice to see you.
Great. Thank you very much. Good to be here.
Excited to get your thoughts and insights on the inflation matter. I pulled up a recent quote of yours where you referred to inflation as an emergency. Now, I haven't heard that before. It's an emergency for you.
Well, it is. Politically, it's a big emergency for the Biden administration, and let me explain why. First of all, the administration and many other pundits for a while were calling the inflation numbers transitory. That's simply not the fact. And the reason this has happened is we have never printed 12 cycles. In other words, for 2 years, 24 months, we printed $3 trillion. That's never happened ever in any economy anywhere on earth. And so that's incredibly inflationary. If you did that in some countries, you would have hyperinflation, but the American economy is so large that it was just smaller in many respects. But still 7%. These are huge numbers. You haven't seen this since the 80s. Now, inflation kills presidencies. Why? Because where it hurts most is in food and energy. So if you're driving up to fill your car up in San Francisco or San Diego or Texas right now, and you're paying $5.05 a gallon, that really makes you unhappy. And then you go to buy protein in the grocery store, it's up 24%, 25%, or in some cases you can't even get it. For example, here in South Beach in Miami, we can't get any ham right now because there's no transportation. 20% of the drivers that drive trucks are not working right now, partly because we paid them not to work and partly because of COVID still rampaging around different places. But, at the end of the day, it is an emergency because you can't stop but think about what you're paying. And that makes people unhappy, and they reflect it when they go to the polls. So traditionally, the incumbent always loses seats in the midterms. We're now in midterm season. That's coming in November. But in this midterm election, I think you're going to see a slaughter fest. It's going to be really ugly for the Biden administration.
Yeah, slaughter fest. Now, do you think that this will cause the Fed to become more aggressive and act quicker with their interest rate hikes then, if inflation is the 1,000-pound gorilla in the room, as you call it?
No, I don't think so. And I'll tell you why. You've got really good numbers in employment. That's okay. You've got inflation sort of 6.2 to 7%. That's not okay. But you also have a very broken supply chain system right now, very broken. And part of the inflation numbers are supply chain. So it's really hard to put the brakes on the economy and make the economy more expensive for the supply chain by raising rates. So this will temper their enthusiasm. And my guess, and everybody's trying to figure out what the Fed's going to do, I think what we'll get is 3 25 basis point hikes during this calendar year. That's not a lot.
Right.
And so, at the end of the day, they'll err on the side of waiting for inflation to come down as they repair the supply chain, hopefully, over the next 2 to 3 quarters.
So, Kevin, why do you think they wouldn't act more aggressively then?
Because the risk you have in moving aggressively is you cause a recession. A recession when supply chain is broken is particularly painful. So they're in a bit of a tight squeeze here. Inflation is actually taxed. When you have cash sitting in the bank making 20 basis points and inflation 7%, you're effectively being taxed at 6.8% on your cash. Buying power is going down by that much. And so that's painful. But if all of a sudden you dry up the economy's momentum and people start losing their jobs because it's a recession, that's a much worse place. So pick your poison. That's
right.
Really what the Fed's trying to do. And I think they'll err on the side of being a little more dovish.
I'm curious to know, because obviously their other focus is keeping the stock market afloat here. Could there be a situation where you can fight off inflation successfully, but at the same time not crashing the market? Can you do that?
You can. That's called a soft landing, and it is possible. And I think that's going to happen because the underlying economy is very strong right now. Consumers have a lot of cash. We gave them $3 trillion worth of cash. over the last 2 years, and sitting in bank accounts all over the country. And assets, hard assets, everything from cars, watches, jewelry, and stocks have all stayed very, very strong because there's so much of this cash around. And so at the end of the day, I think we're going to have about 8% earnings growth in the S&P, add another 1.5% for dividends. So this year is going to return about 9.5%. That's a pretty normal year. I think that's much better than being in fixed income and much better than being in cash, which is why you see the markets relatively, strong and buoyant on at least the index basis. There are names within it that have had major corrections, but the overall market is still the place to deploy capital.
I want to pick up on two things you said there. One, when you said the supply issue, is part of the equation when we're talking inflation, because I've had experts on, a professor recently who said it has nothing to do with supply chain. It's really just the money that's being pumped into the system that's causing it.
I wouldn't agree with that. I'm living with it in my private companies. And the one I always use as an example is my gym equipment company, very successful, called PRX in Fargo. That's the heart of America. And we were buying all of our elements for the gym equipment from Asia prior to the pandemic. Now we can't get them. So we've had to source them domestically at a 33% increase in the input costs. So we increased our pricing for our gym equipment by about 17%. That's pure inflation. There was no issues with sales. They continued to grow, absorbed by the consumer. But we would, to be competitive, drop our prices when the supply chain is working again, when we can get nuts and bolts and barbells and seats and everything else back from our original suppliers. So to say that it doesn't have any effect to break the supply chain and it's not inflationary would be incorrect.
You mentioned cash. Are you looking to lessen your position in cash?
It's been a real challenge. It really has been. I sold off a lot of real estate over the last 24 months, commercial real estate for various reasons. That went to cash. And when I called the cash desk, they offered me 22 basis points. And that's the journey I took into crypto. I'm now using stablecoins with a company called Circle in USDC to actually stake stablecoins in 30, 60, 90-day contracts. And I'm getting about 6.5%. So at least I'm holding my own against inflation. But that is a cryptocurrency and it's not regulated yet. So I don't expect many corporate institutions would do the same thing. It took me 6 months to get my auditors to sign my statements on this, and they only allowed me to treat it as if it was equity. So I can only have up to 5% in any one mandate in stablecoin or any crypto. So there's a lot of moving parts here. Cash is not a good place to be. People debate it all the time, but you are really getting taxed at a huge rate with cash right now.
You brought up cryptocurrencies, so let's go there, because Bitcoin mining is going to become a huge focus for the first quarter of this year, Kevin. Let's look at the crackdown happening on Bitcoin mining and what this could mean for, or crypto mining in general, and what could this mean for the sector's fate here?
Well, let me tell you why the issue is emerging so quickly. Many institutions are not allowed to own Bitcoin. That's well known because it just hasn't been ruled by the regulator yet. So as a proxy to getting exposure to Bitcoin, they buy the equities of public Bitcoin mining companies, Marathon, Riot, etc. These companies mine the Bitcoin and keep the majority of them on the balance sheet. So as time passes, more and more assets go on the balance sheet, and it trades with the volatility of Bitcoin. You can watch these stocks go up and down almost in complete proxy to Bitcoin. However, recently, because of primarily the Larry Fink ESG mandate that came out of BlackRock, the largest money manager on earth, the #1 manager of sovereign wealth and pension plans, BlackRock said, look, here's how we feel about this. You have to have an ESG sustainability mandate. And that includes a mandate that can be audited. So the Bitcoin mining industry started buying carbon credits to try and make them look like they're green, but it's completely unauditable. You don't know, where the electricity is that you're using. Was it made with burning gas? Was it made with burning coal? And how much should you buy in carbon credits? And the tracking error is huge. So if you were to audit one of those companies, they're going to be way offside. And so what I've been doing is selling Marathon, selling Riot, selling all of these public mining companies, because I know this is coming. It's going to hit them this year, and they are going to get crushed because all of their institutional following is going to leave. The solution is emerging in countries like Canada, Norway, even in upstate New York and West Texas, where these new generation miners, these new companies are setting up mining operations beside hydroelectric, wind, power, and nuclear. And the reason they're doing that is there's no carbon in that equation. They don't have to get audited. They don't have to buy carbon credits. They don't have to worry about it at all. And they're doing the same thing. So I took the capital that I made by selling all those dirty miners, if you want to call them that, and I put it into these new companies that can show me that their facility is being built in Norway. And that's one of the biggest projects right now. This is really important because now I know with certainty that every coin I own is mined sustainably, not using carbon at all, doesn't need to have a carbon credit. The government there supports the activity. In this case, in Norway, it's in a town with 3,000 people. Many of them work at the facility, and this miner, and this is the new story that's going to have to emerge to offset policy changes at the federal level, domestically and in other countries. We are using the heat from the stacks to grow hydroponic vegetables for the village and helping fish spawn with a rookery that we're also supporting. So that's how you integrate in with society. That's how you become a good corporate citizen. That's how you stay compliant with the ESG mandates. That's how you're going to mine Bitcoin. So if I were an institution now, I would be very careful in what Bitcoin mining stocks I own. Stay out of the dirty miners. If they say to you they're buying carbon credits, run for the hills.
That's a red flag for you. Can you share companies that you're liking right now, Kevin?
Yeah, I've been very constructive in putting on my position with Facebook after a 30% correction. That's a huge buying opportunity. Very rare that a company that size would ever draw down 30% in just a few trading sessions. And I think that's a good place to park some capital. I've been very, very active. I've recently became an Emirati citizen, so I can partner with projects in the United Arab Emirates and infrastructure projects all around the world. And they're very interested in clean Bitcoin mining. So I partnered with them in a facility in Norway that I just spoke about. I've also become a shareholder of Wonderfi, which is the company in Canada. As you know, the Canadians licensed a crypto exchange. So that was really interesting. And Wonderfi purchased that exchange. So now Wonderfi is a public company in Canada that owns a crypto exchange and can actually onboard people with fiat currency and price discover Ethereum and Bitcoin. There's nothing like it in the US, and that's a very advanced regulator in Canada. So I'm looking for geographies, countries where they are allowing that kind of regulation, and you're going to find it in Switzerland, Germany, Australia, and the United Arab Emirates. So I think Wonderfi, if you listen to what the manager is saying, is going to be a consolidator of crypto exchange licenses. And when you own a license for crypto exchanges, you're agnostic to crypto pricing. You don't care if it goes up or down. You get paid when it trades. And so I think Wonderfi is a great proxy for getting exposure to crypto infrastructure and not have to worry about the price of Bitcoin every day.
And you know, for the investor at home, I mean, obviously you're plugged in, you have access to a lot of information. Is it easy? Is it just a little bit of legwork and homework to identify who is truly green in this space?
Well, it's very simple. You have to just look at the press releases of these companies and see if they're buying carbon credits. And if that's the case, that's going to get ugly, because when they get audited, they're going to be so offside. You know, there's been a lot of scamming going on in ESG. I mean, people know they have to be compliant, but they just buy a couple of carbon credits and say to everybody, oh, we're green. It's a total scam. And so what is really, there's industries such as airlines that have to buy carbon credits because there's no alternative to jet fuel. However, if you're mining Bitcoin, you can use hydroelectricity. You have to move your computers to where there's hydroelectricity. And a lot of these miners didn't care about that when they set up facilities. And now they're just dirty miners. And they're going to get shut down, and or their shareholders are going to abandon them, or they won't have access to capital, all of the above. You want to avoid those situations.
Just to that point, I read a recent quote from New York City Mayor Eric Adams, who obviously is trying to make New York City, a crypto hub of the world. He says he is pro-cryptocurrency, anti-crypto Bitcoin mining. Is that possible to be both sides of that?
Yes. What he said was he doesn't want the mining facilities in New York State. And the problem with that statement is what happened. There were many facilities being built, hundreds of millions of dollars of projects being built around the Niagara Falls area at that time. When those politicians, both in rural New York and in New York City, started saying that, the capital just disappeared. And it went to places like Quebec and northern Manitoba and Nova Scotia and Norway and West Texas. So you got to think that through. Politicians have to think that through. The better strategy, which I think is where we're going to go, is they're just going to make it illegal to mine Bitcoin unless you're doing it on a sustainable basis, which primarily right now is hydro. And what countries in the world have hydro? Well, the Nordic countries and Canada. So they could be the beneficiary, which is why Michelle Rempel in Canada introduced a bill yesterday in the Parliament of Canada talking about a study on how the country should support crypto. And she's smart. I mean, there's so much capital that wants to go somewhere into crypto. Canada could lead there. And I'm certainly, I contacted her as soon as I got that information. I saw it on social media. Yeah. And I spoke with her, and I am going up there to talk with them about what we can do together. Yeah. In Canada. I haven't invested anything in Canada in a long time, and this is a real opportunity.
Well, as a Canadian, I think that would be a great opportunity for the nation. Just a question for you, just purely educational. If there is this crackdown and more legislation coming towards Bitcoin mining, how would this impact price, Kevin? Would it?
I don't think it would affect price. Bitcoin will be mined in perpetuity somewhere, and there'll be these coins awarded into pools. What's going to affect price, and why I'm long Bitcoin and why I'm investing all this time and money in these facilities where I have direct ownership, is at some point in the next 2 to 3 years, the US regulator is going to rule on cryptocurrencies, and they will rule first on stablecoins and Bitcoin itself and Ethereum. And the very large assets by market cap. As soon as that happens, if I'm running a sovereign fund or a pension plan, I'm going to allocate to it probably 1 to 3%. And I want to be long Bitcoin when that happens. Because you want to talk about Bitcoin going to 100,000, 200,000, 300,000, it's going to be when institutions can finally buy it. Because I can tell you with certainty right now, because I service sovereign wealth funds and pension plans in the indexing business. For all of the hype around Bitcoin, none of those institutions own a single coin. And they're not going to until their compliance departments allow for the ESG mandates to be, check the box on that, and of course, be compliant on the asset class itself. But when they do get that go ahead, the price of the coin is going to appreciate dramatically. And remember, the way to think about Bitcoin, it's not a coin, it's software. And so it's software. So if you think about it, Bitcoin being software, which is what it is, and these institutions own Microsoft, they own Google, that's all software too. So it's very easy for them to get their heads around it as soon as it's compliant. They'll buy 1 to 3%, and that's when the price is going to appreciate. And I think that's going to happen in the next 2 to 3 years.
No, thanks for answering that, because I was wondering, are guys like Michael Saylor sweating with the crackdown coming on Bitcoin mining? So that was
he should be concerned. He should be dumping his shares in the dirty miners and redeploying it in the clean miners long before the regulator regulates.
Kevin O'Leary, as always, I appreciate your thoughts. Thank you so much for stopping by.
Take care. Great to be with you.
And thanks so much for watching Stansberry Research. We'll have more great content coming your way. And don't forget, exclusive content only at danielacambone.com. Thank you so much. That's it for me.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.